Thinking more like a farmer could make you a better investor. How? Coming up on the Fed Corner. That's right, if you were to think more like a farmer rather than someone trying to grow their money using the markets, you might actually have a higher chance of becoming a better investor. Today's video is a little more playful, but there are some incredible principles that I know will help you be a better investor. You see, there are some pretty obvious behaviors for a farmer that directly translate to good behaviors when it comes to investing. And each principle will build onto the next one, so make sure that you listen through all of them to see how they come together. These are all things that we regularly discuss with our clients, and I know they'll be helpful to you too. Grab a pen and let's jump right in. The first is, don't blame the crop for not growing fast enough. As investors, we live day to day, which means we feel the up and downs of the markets throughout our lives. And the markets don't always share the same timelines as our own goals and objectives. And it's important to remember that just because an investment isn't growing as fast as you'd like, doesn't make it a bad investment. Now, it's not always like this. Sometimes there are valid reasons why an investment is not performing well. But you have to remember that being an investor rather than a trader means that you keep a long-term view on how using the markets as a tool will help you to meet your financial objectives. If you were to sow a plant, you know that it takes time to grow and mature before you're happy with the results. And investing is very similar. Number two, don't uproot crops before they've had a chance to grow. Sometimes we look at our portfolio balances and they may be lower than where they were several years ago. Does this mean that you've lost years worth of work? Not if you have the right investment strategy. You see, uprooting your crops too early might look something like moving too much of your TSP into the G fund or other investments into cash-like vehicles. Think back to 2020 or 2022. Stocks really weren't doing too well, and in fact, bonds weren't doing well either. So lots of federal employees began to move tons of their TSP into the G fund, so that at least they were protected. But then think about how this year looked in the markets. The S&P has been doing really well this year, but it wasn't until about a third of the way through the year that we started to see federal employees getting back into the CS&I funds again, after plenty of the growth had already happened. Instead, if they had been patient, they may have been able to recapture all of that growth by having stayed invested, so long as that was the right strategy for them. Folks, volatility is a part of the deal. You get some, you give some. Farmers understand that not all of their crops are going to flourish brilliantly every single year. So the key here is to have enough flourishing crops, or in our case, investments, that were ending up in a better place than when we started. This is a graphic that represents the totality of the market since the 1920s or so. And you'll notice, what's the overall trending pattern here? It goes up, right? But if we were to zoom in on any number of years, it can get pretty bumpy, right? We live in the day-to-day as humans, so we can't help but feel that bad years in the markets just seem to drag on. But if we keep the big picture in mind, then we might keep ourselves from making the mistake of uprooting our crops too early. And if we zoom into this little blip right here, this was 2020, the pandemic where the world was going to end. The entire bear market was encapsulated by this tiny little blip. And this massive recovery after are the years afterward that if you weren't able to stay invested during that time because maybe you didn't have the right investment strategy or a retirement plan with which you were comfortable in doing so, then there's a good chance that you missed out on a lot of that regrowth. The next is that they remember they can't control the weather, but they can be prepared for it. We have 4 seasons in our weather. Well, unless you're in southern Florida, in which case all you have is hot. But in economics, we also have 4 seasons that you need to know about. The first is when we have higher than expected inflation. That was just like this year. We also have lower than expected inflation. We also can have higher than expected growth or lower than expected growth. While this is a bit of an oversimplification, if you can remember these 4 seasons within the economy, then you can have a good sense on how you should start thinking about your investments and how they need to change over time. Just like we use an umbrella or a raincoat when it's raining outside, the same is true when we have a rainy season in the economy. There are specific asset classes that are best suited to deal with each one of these kinds of seasons. And so you should make sure that you're invested in a way that is dependent on what the weather looks like. Before I do the next one, if you've liked this so far, hit the thumbs up for us so that other federal employees get to see this too. The next is to choose the best plants for the soil and plant more than one type of plant. Think of the soil like your retirement plan. what is the best type of plant for that kind of soil? Well, if you have one type of soil versus another, then you know that some plants will do well while others might not be the best. Now, this one is easier said than done. The idea here is not that you're picking investments that are always winning. There's no such thing. But you want to be thinking about what your soil or your financial goals are comprised of and then invest according to that. What works for your neighbor, for your colleague, for your coworker, may not be the right investment strategy for you. Now, the challenge here is that unlike soil, your life and your plans can change pretty rapidly. This is why sowing a good variety is also going to help you. If your situation changes or if the economic weather changes, then you're well diversified to be able to handle and still meet your objectives. So the key here is to make sure that you have the right asset allocation for your plan and make sure that you're well diversified. The next one is irrigate, fertilize, and check on your crops. Folks, this is a big one. When you're younger and you're still working, investing can be pretty easy. You save as much as you can and you invest for growth using vehicles like the CS&I funds or other growth type of index funds. And over time, you're likely to participate in the growth that you're seeking. Easy enough. But in retirement, you need to do a lot more irrigating and fertilizing. Just like plants, your portfolio is going to need different things once it is flourishing and producing fruit later in its life. If you're not maintaining your wealth in retirement by doing things like tax loss harvesting or rebalancing or reallocating and adjusting against portfolio drifts, as well as myriad other tasks, then you might be holding a portfolio that's not really suitable for what you're trying to accomplish. And if you're not working anymore, then you don't have the time to recover from a mistake. So you have to be making sure that you're doing the necessary maintenance so that your portfolio is as healthy as it can be. Next up, removing weeds. Everyone knows that weeds around your plants are bad and that they waste resources from your soil. The same is true in your portfolio. Over time, and the longer you're an investor, you may have inherently picked up different kinds of investments along the way. We often find with retirees that come to us that some of these investments are not really the best thing for them as they move forward into retirement now. Now, this is not to say that you should be actively trading your account consistently. On the contrary, too much trading can be just as bad, or in some cases even worse than not trading enough. I hope this simple analogy proves to be helpful to you, and we have a few slots open each month for new families interested in working with us. So if you're 1 or 2 years away from retirement, or maybe you're already retired and you want to know how you can apply, check out our website at thefedcorner.com. Until next time, stay wise and stay wealthy.